Okay. No, okay. Look at this quickly. Prepare the group statement of profit and loss for the year ended 31st December X9 for the Kathmandu group on the basis that Kathmandu PLC sold its holding in Nepal on July X9 for 200,000. This disposal is not yet recognized in any way in Kathmandu Group's statement of P&L. Assume that Nepal does not represent a discontinued operation. If it does not represent a discontinued operation, so it means you need to do the line by line consolidation. Line by line consolidation means we'll take revenue of parent as well as we'll take revenue of subsidiary. But revenue of subsidiary that into time apportionment. For example, if you have kept the subsidiary with you for, let's say, 8 months, 9 months, then you will have to time apportion the results of your subsidiary. Similarly, you will take cost of sale of, let's say, parent, 100%. But cost of sale of when you will take the subsidiary, you have to time apportion. Explain and illustrate how the presentation of the group statement of profit and loss would differ from part A if Nepal represented a. Basically, if Nepal represented a discontinued operation, then up to the date of disposal, you will have to calculate the profit or loss of the subsidiary, but that will be represented under discontinued operation plus the gain or loss on disposal. You will also take that into the discontinued operations. Let's read the question and then we'll quickly discuss part A and B. Simple income statement. They have also given us other information also. We have retained earning brought forward, profit for the period. We have dividend paid as well. Okay. Retained earnings. Additional information. The accounts of Kathmandu Group do not include the results of Nepal. Fine. On January X5, Kathmandu Group acquired 70% share of Nepal for 100,000. It means this 100,000 is your cost of investment. When the fair value of Nepal's net asset was 1,10,000, it means fair value of net asset at acquisition. Nepal has equity capital 50,000, share capital. At the date, the fair value of non-controlling interest was 40,000. It is group policy to measure NCI at fair value, means full goodwill method. Nepal paid 2000 X9 dividend in cash on 31st March X9 prior to the disposal. Goodwill has not been impaired. Can I say if goodwill has not been impaired, then obviously goodwill at acquisition will remain same for goodwill at disposal. Just let me show you the working one. Goodwill. We will be just calculating few values, not 100%. Cost of investment. Parent cost of investment is 1 lakh. Fair value NCI is 40,000. Fair value of NCI. Less fair value net asset, they have given us 1,10,000. Fair value of net assets at acquisition. Simply the goodwill is 30 at acquisition as well as at disposal date. Because there is no impairment loss. That is why. Goodwill will remain same. Okay. Now working 2. Look at this. When we are selling our holding in the subsidiary, that is very important. On 1st July X9 means mid of there. So we need to calculate net asset of Nepal at disposal. Net assets of Nepal, that is subsidiary, at disposal. Never forget the date is 1st July, X9. It is important for us. Mid of there. Okay. First of all, take the share capital, and we know that share capital does not change. Okay. So at acquisition, the share capital was 50. Okay. At acquisition, fair value of net assets. At acquisition, fair value of net assets, they also have given us. Okay. Share capital is 50,000. They have given us the fair value of this. They have given us more information. Okay, come here. Great. Examiner has given us the retained earning brought forward. 80,000. Then profit for the year is 36. Now, please try to understand. We are calculating net asset at disposal, but the date is important. Where is this? Okay. Net asset of Nepal at disposal. Let's take share capital. Retain earning brought forward means on 1st January X9. Because we know that net assets, they are equal to equity. The retained earnings brought forward. For the whole year, the profit for the 12 months is 36,000. Nothing is mentioned. You will always assume that profit is accrue evenly over there. Simply take the profit up to disposal date. Profit up to disposal date. For the 12 months, the amount of the profit is 36,000. 6 by 12 is 18. Now listen and listen carefully. Subsidiary has given the dividend, and this dividend, the dividend was given on March X9. Since the dividend was given prior to the disposal, so it will be deducted. Dividend was paid by the subsidiary prior to disposal. So dividend paid prior to disposal. Dividend paid prior to disposal by Nepal. 10,000. So 50 plus 80, 130 plus 18, 148 minus 10, 138. So net asset at disposal. Net asset at disposal is 1,38,000. Okay. Now let us try to calculate NCI at disposal. That is going to be working 3. NCI at disposal. First, we have to take fair value NCI at acquisition. Fair value of NCI at acquisition. They have given us 40,000. Now listen and listen carefully. At disposal, we have calculated net asset 1,38,000. At disposal, the net asset are 1,38,000. At acquisition, they were 110. So we have to give share to NCI. So simply add NCI share of post acquisition net asset. We have calculated the net asset at acquisition 1,38,000. We have calculated net asset at disposal. They are 1,38,000. At acquisition, examiner has given us 1,10,000 into 30%. Parent's holding is 70, so obviously NCA holding is 30. So 1,38,000 minus 110, the difference is 28. 30% of 28,000 is 8,400. So NCA at disposal is 48,400. Now we can calculate gain or loss on disposal. Parent has sold entire holding for 200,000. So let's calculate. Gain or loss on disposal. Simply consideration received or sale proceed, whatever you say. We do not have anything fair value of remaining investment because 100% investment is sold. So simply less interest in subsidy dispose of. Interest in subsidy. Dispose of. Take net assets at disposal. Which is working 2. Goodwill at disposal, 30,000. I think it was working 1. Simply less NCI at disposal. I think working 3 if I'm not wrong. Yes, 48,400. So 1,38,000 plus 30 minus 48,400 gives us 1,19,600. So here comes gain on disposal. Which is 80,400. Gain on disposal is 80,400. So I hope this calculation should not disturb us. So let me quickly share the answer of this. Test your understanding. I hope we understand it. It's here. Consolidated statement of profit and loss, full disposal. Parent's revenue. Since we have sold the subsidy after 6 months, so that is why 6 by 12, line by line consolidation. Operating cost. In the question, they have used the terminology operating cost, so same terms are using here. Parent 450, then time apportionment, and this is important. Please listen. Parent is having investment income 8,000. Now, from this investment income, we need to deduct the dividend from subsidiary. Because dividend from subsidiary, obviously, parent will show in its individual income statement. You cannot show that in group accounts. In group P&L, you cannot show that. Deduct. Subsidiary has paid the dividends 10,000, but obviously entire 10,000 does not belong to parent. So 70% of this will be deducted. This is how we get this 1,000. Profit on disposal, we calculated the same thing. Profit for the period, obviously entire profit does not belong to parent. You have to give the share to NCI also. NCI you can directly calculate. Entire year profit is 36,000. Since we have kept subsidy for 6 months, so 6 by 12. So 36,000 6 by 12 you will get 18,000 into 30%. So you can use the calculator. You can directly calculate this 5,400. So 36,000 6 by 12 into 30%. Definitely you will be having 5,400. And this is the balancing figure. Now, in part B, basically what is happening? Group statement of profit and loss, discontinued operations. Present, look at this. Only parent's revenue. We do not have any other subsidy, that is why. And this subsidy results will be shown as discontinued operations. So parent's revenue, parent's operating costs, dividend from subsidy will be deducted. Okay, taxation. Now you got the profit for period from continuing operations. After that, profit from how we are calculating profit from discontinued? Very simple. Entire 12 months profit is 36,000. 6 by 12. Why 6 by 12? Because we sold the subsidy after 6 months. And look at this. Profit on disposal. I think we did discuss when your subsidy meets the definition of discontinued operation. If the disposal of subsidy meets the definition of a discontinued operations, then profit or loss from discontinued operation will be shown. Subsidies profit with the time apportionment plus the gain or loss on disposal. NCI value will remain same, no issue at all. And there is no other comprehensive income scenario. That is why there is nothing in OCI. In the third part, in C part, what happens? They have sold 35% holding. Now listen. Initially, the holding was 70. Now you have sold 35. So if you have sold 35% holding, can I say this organization will become your associate? Yes or no? Please reply. If you have sold 30% of that, then obviously the company becomes your associate. Even the company becomes our associate. Still, can I say the control is lost? Yes or no? So simply, first 6 months we will be consolidating it, and last 6 months it becomes our associate. And in associate, in the P&L, you just need to calculate income from associate. That's it. So look at this quickly. Revenue, operating costs, exactly everything is same. Profit on disposal is same. Actually, why profit on disposal is same? There's a reason. Examiner has not given us anything regarding fair value of the remaining investment. If examiner gives us the information regarding fair value of the remaining investment, then obviously gain or loss would have been changed. Because how do we calculate gain or loss? Consideration received, add fair value of the remaining investment. Consideration received, add fair value of the remaining investment. Look at this last 6 months income from associate 36,000, 6 by 12 and 35%. Working 1, working 2, 5 and working 6. Okay. So students, you can see that if your disposal of a subsidy, if it meets the definition of discontinued operation, so main thing is a single line item, how to show that. Important thing is you will have to include the gain or loss on disposal as well in the discontinued operations. Just a minute, just a minute. Look at this sale of shares without losing control. Very important point. Can I say if subsidiary remains subsidiary, whatever the gain or loss comes, that will go to OC, other component of equity. That will directly go to equity. It cannot be shown in OCI. From the perspective of the group accounts, a sale of shares which results in a parent retaining control over the subsidiary is simply a transaction between shareholders. If the parent company holds 80% of the shares of the subsidiary, but then sells 5% holding, a relationship control still exists. As a result, subsidiary will still be consolidated in the group accounts. However, NCI will rise. Obviously, NCI from 20, it will become, for example, 25. The accounting treatment, NCI within equities increase. The difference between the proceed received and increase in the NCI is accounted within equity normally in other component of equity. Note that no profit or loss arises on the sale of the shares. Goodwill is not recalculated. The following pro forma will help to calculate adjusting the required NCI. Cash received from NCI and simply less increase in NCI. Either you will get gain or loss. The increase in NCI will be the share of net asset always and goodwill, fair value method only, of the subsidiary at the date of disposal, which the parent has effectively sold to NCI. For example, if NCI shareholding increases from 20 to 30%, then the carrying amount of NCI must be increased by 10%. Look at this. Up till 30th September X7, Juno held 90% of Hera. On that date, it sold 10% interest in the equity capital for 15,000. At that date, the share disposal, the carrying amount of the net asset and goodwill was 100,000 and 20,000 respectively. At acquisition, NCI was valued at fair value. Cash received is 15,000. Increase in NCI is 12,000. So the balancing figure is 3,000, which is a gain, and that gain goes to equity. Means cash is debited by 15,000. NCI will be credited by 12. And equity, logically, it is gain on disposal. That goes to OC, other component of equity. I hope this should be clear to everyone. So simply cash debit NCI increases. So, and this is the 10% we are multiplying with net assets at disposal, including goodwill. And look at this. Again, very important concept. The increase in NCI will be the share of net assets always and goodwill. But look at this, what is written? Fair value method only. So it means you will only consider the goodwill when it is a full goodwill method. In case of partial goodwill, you are not going to bring goodwill here. The increase in the NCI will be share of the net asset always and goodwill only in case of fair value method of the subsidiary at the date of disposal, which the parent effectively sold to NCI. Now look at this again. We are getting a cash 15,000 at the date share disposal, the carrying amount of the net asset and the goodwill. This is net asset and this is goodwill. So we are getting 15,000 and we are simply disposing of net asset. They are 12,000. So NCA increases by 12,000. We are getting cash 15. So simply 3,000 is our gain, and that gain goes to equity, other component of equity. So students, we have discussed, I would say, disposal of subsidiary. There are 4 situations. We have mainly in the first 3 situations when control is lost, gain or loss goes to income statement P&L, goes to the group P&L. If control is retained, then whatever gain or loss comes, that goes to OC. Now, inshallah, In tomorrow's class, I'll be discussing step acquisition. Plus, I think we should get times, then we'll be discussing IS 21 as well. Because after these two topics, then we'll be doing, inshallah, consolidation questions. But I would request, please, you people should be focusing on your mock as well. Do give the mock, it is very important. So, tomorrow again, we'll be having a class. I'll try to cover both the topics if it is possible. Step acquisition and as well as IS 21. So simply, students, thank you very much that you have taken time for the class. I hope that you people are happy with the revision of consolidation, because I'm not taking much time, long classes for the revision. In a very short period of time, I'm just trying to recall that your all concepts should be, brush up. So after these two topics, I think all the concepts will be completed and then we can go towards questions. So thank you very much, students. See you all inshallah tomorrow. Have a nice life.